Mark, it's great to see you again. Thanks for the help today.
Hey, Carl.
People trying to figure out whether this is demand destruction, maybe built on Musk's antics over at Twitter, or if it's actually just a revaluation of what the EV space is going to be, what penetration is going to be, say, by 2030. What do you think?
Well, I think overall, this is the first time Tesla's facing what I would call some demand issues, right? You have an economy that's slowing. You have interest rates that are going up. When you look at their business, right, they've had a lot of price cuts in China, which hasn't produced the results they expected. Now, how much is that actually their demand for their product versus COVID is still yet to be seen. But even here in the U.S., you know, they have a large market share. It's been declining because you can only go down from 100. But it is going to be declining with the established OEMs introducing products. But when you look at a couple other data points, it shows there's, you know, demand may start supplanting supply issues for them. You mentioned the price cuts that they announced today. They doubled the incentive to take a Tesla by the end of the year to $7,500. And then when you look at their inventories in the third quarter, they actually manufactured 22,000 more vehicles than they delivered, and they messaged that may, you know, be a similar issue in the fourth quarter. So you're starting to see their inventories build a bit. So I think this is the market, because when you have high interest rates and price points well above $50,000, that's a tough sell for consumers that are stressed right now.
Yeah, I'm thinking back to, remember the old quarters where Elon would say, oh, we got to smooth out the quarter, meaning we had to get better at not having to produce as many at the end of the quarter. Now it's about moving those cars at the end of the quarter. It's almost an inverse of the prior relationship.
Yeah, it's a logistical issue, too, because, you know, when you're trying to move that many vehicles at the end of the quarter, your logistics costs go up because you're trying to jam through a lot of vehicles that have to get delivered to different parts of the country in very few days. So, listen, at the end of the day, you know, the EV market penetration in the U.S. is going to continue to rise. Tesla's a leader there. But remember, this is the first time as a company, as a young company, that they're experiencing an economic downturn. And now they're competing, now that they're a presence, you know, big presence in the auto industry, now they got to compete with the established OEMs who are quite experienced in dealing with economic downturns.
Right. You know, I'm thinking back to a few years ago where Tesla was flying high, was valued more than every other automaker combined, and people argued, in the end, legacy OEMs usually end up with a similar type multiple. And I wonder if you think the cycle is headed that way for Tesla, because if Tesla's premium multiple gets more in line with Ford's, then the stock has a lot further to fall.
Yeah, I mean, the multiple's down significantly, but it still carries, you know, I think a 30 or 40 times multiple versus the established OEMs, which are in the 5 to 6 range. So, you know, they still carry a premium there. And listen, a lot of that multiple, Carl, was the fact that, you know, that it's a high growth stock, and they projected high growth over the future years. And so investors took confidence in that. And then when you start to see, you know, some of that confidence wane, that gets reflected back on the stock price, which I think that's why you're seeing, amongst all the other issues with surrounding Elon Musk, it's now people are really focusing on the fundamental growth capabilities of the company, which are still very good, but maybe don't demand that kind of premium that they've had in the past. And I think the market is speaking in that regard.